Welcome to another episode of the Real Estate Market Minute. My mission is to help you better understand the latest trends in the U.S. real estate market and share with you my analysis and industry expertise. I want to help you gain an advantage and feel confident whenever you're buying and selling real estate. I'm your host, Mark Salib. I'm a passionate real estate professional, advisor, and investor, and I love what I do. Follow and DM me on Instagram at The Salib Group. Send me an email, mark@thesalibgroup.com. And as always, thank you for tuning in to today's show. All right, today we got the Case-Shiller national housing data coming out. And if you only look at the headline number, you might think nothing much is happening. But that's the problem, because the national number does not tell the real story anymore. It's in the cities. And when you go into the weeds a little bit, you can clearly see there's winners and there's losers. Some housing markets are still winning, some are flat, and some are already declining. It's not one national housing market anymore. We've been talking about this endlessly. It's a split housing market. All right, national Case-Shiller data. This is the S&P Totality Case-Shiller March 2026 report. Came out on Tuesday morning, and the U.S. National Home Price Index is up. All right, up 0.7% year over year. Now that is down 0.8% from the previous month. The 10-city composite, so remember, Case-Shiller tracks 20 major cities, major metros in the United States. That's basically all it does. It tracks these cities. The 10-city composite was up 1.4% year over year. That's the 10 that they break up into the top 10. And then the 20-city composite up 0.8% year over year. Now, again, all these numbers are down from the month before, okay? So what it's showing you is that nationally home prices are still positive, but barely, right? And that's the key. Why is it essentially flat? And you see this national housing market data just sort of move sideways. Not really going up, not really going down. And also want to note here, Case-Shiller is not real time. This is lagged data. It's a 3-month moving average. So that March report is really reflecting closings from earlier months, from the past 3 months. So this is, again, it's very well respected data. Everybody follows this, like economists, experts in the industry, investors alike. All right, but it is delayed. So if you are seeing weakness in this data, it means that weakness started a few months ago. Now, the big point, what's the big point here? Okay, you see a national number, up 0.7%, right? Makes it kind of look like, well, I guess the whole market's flat. But again, very misleading. Because when you look deep into the numbers, you start noticing places like Chicago and New York and Cleveland looking pretty good. Then you start to see some other cities, Denver, Tampa, Dallas, Seattle, starting to struggle, right? So you average it all out and you go, well, we're flat. But again, it's a very split housing market. And listen to this. This is S&P themselves, quote, and this came out in the report, quote, more than half, this is very important. More than half of the 20 major U.S. housing markets recorded year-over-year price declines in March. More than half were lower. That's a big deal. All right. And they definitely noted the geographic divergence. Midwest, Northeast markets are still seeing modest growth, while most of the Sun Belt and the West are seeing declines. All right. More consistent with what we've been noticing. All right. Let's talk about the winners first. So really, the top one here is Chicago. Chicago led all 20 cities with a 6.1% annual gain. And again, it's a Midwest city, right? We've talked about this theme a lot. The Midwest is holding up better, and it's because affordability is still pretty reasonable in the Midwest. So Chicago, out of the major metros that they cover in the Midwest, was number one, up 6.1% year over year as far as home values and price increases, right? All right, number two was New York, right? New York was second with a 4% year over year increase. And New York, we've talked a little bit about New York. There are inventory constraints. There's good demand in New York. which is what's keeping those prices strong, right? Number 3 was Cleveland at a 3% increase year over year. Again, affordability, right? Buyers still function in these markets than they would in, say, the Sun Belt or the West Coast. It's an affordable Midwest market for a major metro, Cleveland. Price value up 3% year over year. All right, let's talk about the losers. Seattle, down 2.5% year over year. That was the steepest decline out of any of the major metros on this list, right? Seattle's becoming a very rate-sensitive market. Very high cost, affordability, a big challenge. And there's your West Coast city, right? There's a theme right there. All right, what else? Denver, down 2% year over year. It's another market where affordability and inventory pressures are showing up. Tampa, Florida, down 1.9%. Remember, Tampa was a post-pandemic boom market, and now it's starting to give some of that back. Dallas down 1.7% year over year, right? A lot of new construction in Dallas. So supply is really kind of starting to catch up in Dallas. Phoenix down 1.6% year over year. Another, like Tampa, post-pandemic boom market that's just cooling off. Los Angeles down 1.6% year over year. Also interesting, LA turning negative. You know, it's an expensive market struggling with affordability, right? And Washington, D.C. down 0.1% year over year. That one turned negative, actually, D.C. All right. And then one other note here from Case-Shiller was they had no valid March data for Detroit. They do follow Detroit. But they mentioned something about transaction recording delays in Wayne County, so they could not get the Detroit number. All right. So there you have it. So what's going on here? Well, one thing we notice, there's a pretty big spread between the strongest and the weakest market. What do I mean by that? Well, Chicago was up 6.1%, right, year over year. We noted that was the best one. Whereas the worst city was Seattle, down 2.5%. That is a big spread between the best and the worst. I mean, you got one city up 6% and another one down 2.5%. I mean, if that doesn't tell you everything you need to know, that, you know, you look at national housing market data and you think you know the story. I mean, you absolutely do not, right? That is a huge difference from just one city to another. Major cities here, Chicago and Seattle. All right. And we've been seeing this. We've been saying it. We've been seeing it. The National Association of Realtors showed major regional divergence in their numbers. Redfin showed real concentration in certain specific neighborhoods when it came to actual buyer demand, right? Builder confidence. If you look at builder confidence in the different regions, there's a big difference, right? Affordability versus, you know, whether a region was affordable or not had a lot to do with builder confidence in certain areas of the country, you know. So, you know, we're seeing this split housing market that we've talked about. And I think that national data can be useful, but it's just not enough. It doesn't paint the picture. It doesn't really clarify. You know, so you can't tell me as a buyer, a seller, agent, investor, you can't just tell anybody, yeah, oh, well, home prices are up nationally. It doesn't tell you anything about the local market. You got to look at your city, look at your region, pay attention to what's going on with your inventory, affordability, migration trends, are there price cuts, days on market, right? Local income, local supply. Because Chicago and Tampa, two totally different housing markets. New York and Phoenix are different. Cleveland, Seattle, all different markets. It's really, really split. You know, and it's good to understand, because I think that the national number, it just hides the real story, right? All right. So, yes, not going to deny it. National home prices are still up. They are slightly positive. But the real story is that the housing market is splitting more clearly every single time data comes out. Some cities are winning and home values are rising. Some are flat and some home values are falling in major metros. If you want to understand where the housing market is going next, don't stop at the national headline. Go deeper into the weeds and read into each one of these cities because they all have a different story to tell. That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at the Salib Group, or just send me an email to mark@thesalibgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time. Before we end today's show, stop what you're doing and subscribe right now to Real Estate Market Minute Plus. Listen to all episodes ad-free. Get exclusive bonus episodes and content and help support the show's growth, longevity, and future improvements. Go to realestatemarketminute.supercast.com right now. You can also find the link in this episode's show description. Check it out. I know you'll love it.